Hey guys, welcome back to the channel Let's Make a Mill, as well as my own personal blog, letsmakeamill.com. Today's video, I'm just giving you guys a quick buy update for my October 16 buys. I purchased some shares on M1 Finance into my REIT income portfolio, as well as purchased some additional Fundrise. I'll show you those accounts here in a minute. For those of you who don't know who I am, I'm Eugene Vasquez. I'm basically documenting my journey towards making $1 million. I do that by investing in the stock market, by investing into real estate, and investing into REITs, which are real estate investment trusts such as Fundrise, as well as REITs that are traded on the stock exchange. So without further ado, let's get into the video. So this past week, the S&P 500 has actually been pretty volatile for those of you who've been keeping up with the news. Recently, I think last Thursday, they came out with a jobless claims report, and I believe it was almost close to 900,000, which was almost an increase of, I think, 50,000 from the previous jobless claims report. So that has affected the stock market because people are not working, people are not going back to work. Businesses are closed or are going to remain closed, and the economy still remains affected by COVID by COVID coronavirus. A COVID vaccine has not been released yet and has actually been delayed. So that's also had an impact on the economy, because people cannot go back to work and the whole world at large. Also, in the past 2 weeks, there's been a lot of back and forth about the stimulus talks and whether there's going to be a stimulus package or not. There's plenty of videos out there on the web that I'm sure most of you can look at. I'm not an expert in that, but I just know that that has been affecting the stock market. Earnings for the S&P 500 are predicted to come in lower for these earning reports for quarter three. Versus the last quarter where they were coming in at pretty high. I believe the difference was 20% year over year for this upcoming earnings report versus 30% year over year at a loss for quarter two. So that's a big difference, 10% difference, which is good, but still the entire market at large has a lot of problems coming up, with people still remaining unemployed, businesses closing, large companies claiming bankruptcy and things like that. Using VNQ as a benchmark for the real estate investment trust index, we can see that there was also a large sell-off this last week, and that's due to the same reasons as the S&P 500 with regards to the COVID vaccine not being developed or been delayed, jobless claims report, as well as everything else, all the macro things affecting the stock market and the economy at large. I still remain bullish on REITs, and I'm still going to be investing in REITs. I feel like this may be just short-term pain for a long-term gain, so I'm still going to be investing into REITs for the long term, and I'll show you guys an update here in just a moment. Aside from remaining bullish, the lower it goes, the more I'm going to buy. So for these REITs that I'm purchasing in my M1 Finance portfolio, I'm going to continue buying. I'm going to leave it off with, some disciplined investing principles that I've developed for my own self. I buy simple, passive, long-term investments that I know will, compound over time and I know are safe investments. So I'm not worried and I sleep well at night. So without further ado, let's get into my M1 Finance account and then my Fundrise account, and I'll show you guys kind of what's going on. Okay, so I just logged into my M1 Finance account. We're going to go ahead and take a quick look at my activity. I did purchase $2,000 worth of REITs or 24 buys. We'll just take a quick look right there and see what they look like. So again, nothing spectacular, but these are the buys that I had for October 16th. Again, I injected about $2,000 into the account, and I had gotten a dividend midway through the week, and I ended up just using that money to reinvest into the REITs as well. Again, I'm not holding cash or using the dividends for anything else to purchase anything personal. I'm just using it to reinvest back into the portfolio. So if we actually go back to the portfolio, we can see that the REITs actually had a pretty huge sell-off in the last week. If you look, it's all red. Like, there's nothing green about this. All red, but it doesn't really strike any fear into me because as REITs go lower, I'm just going to continue to buy more. I believe and I am very bullish on REITs. So all the REITs that I have chosen for this portfolio are all best in class, grade A. And I believe over the long term, the benefits outweigh the short-term pain. If we take a quick look at this last or we can take a look at the all. We see that triple net leases are still doing pretty good. Apartment REITs obviously are taking a hit because, you know, people are not paying rents. There's a lot of things, a lot of macro things affecting apartments. You know, the economy remains shut. People aren't going back to work. Ergo, people can't pay rent. So that's what is affecting apartments at this time. The other one that's being highly affected in this portfolio is the strip center REITs. If you don't know what strip centers are, take a look at my video for strip centers, and I basically go over the two holdings that I have in the strip center REIT slice. Basically, what these are large developments, commercial spaces that have, you know, everything from movie theaters, grocery stores, pharmacies, apartments, you know, restaurants, all kinds of things. The strip centers are facing a lot of headwinds right now because, for the most part, most of them are shut down, with the exception of any essential businesses like a Whole Foods, like grocery stores, like pharmacies, like financial services that are, you know, like banks and things that are located in these strip centers. But for the most part, they're being affected, obviously, because a majority of them are shut down. You know, but that's pretty much it for this portfolio update. We'll just take a quick look at the dividend. So taking a quick look at the dividend yield for 24 holdings, I have a dividend yield on this portfolio of about 3.9%, almost 4%. Again, my threshold is getting it between 3.5% and 5%. Because on a hypothetical $100,000 investment into this portfolio, it should yield about $3,500 to $5,000 annually, and that's completely passive. That means I didn't have to do, you know, or deal with tenants, toilets, and trash. So that's going to be this update for this portfolio. Oh my God, my mouse is all messed up. That'll be the update for this portfolio. We're going to move on over to my Fundrise account. Hey guys, so I just logged into my Fundrise account, and as you can see, I have a account value of $22,280. I did just get a dividend of $111.99. And I also, if we check out our transactions, I invested an additional $1,000 on October 16th. It should clear on October 22nd. So if we take a look there, and we can take a quick look at our performance and just kind of see what's going on here. So I'm going to do dollar signs because everyone likes dollar signs. So for quarter 3, this is my return so far. And then if we go down here to annual returns for 2020 year to date, it's been $611.74. All-time $1,380.77. And we're going to go down a little further below. We'll see some net returns here. So in appreciation for the year to date for 2020, I have $335 in appreciation with $290 in dividends. So we're going to actually go up, and I want to take a quick look at the portfolio so everyone can see what the positions are. For my actual cost, for my actual cash value, that means the money I've actually put into Fundrise, it's a little over $20,000, so it's $20,605. With the appreciation, it's at it's at $21,256. And then I'm assuming with dividends and everything else, the position total is $22,280. So, you know, that's just, I just wanted to give you guys a quick update on my Fundrise account. Again, Fundrise is completely passive. It's boring. You just put money in, you let Fundrise manage your money. They go after their own investments, and then you as an investor will get returns on that investment. So gonna go ahead and close out this video here in just a moment. And that concludes my buy updates for October 16th, 2020. If you have any suggestions or if you have any comments, please let me know down below in the comment section. Be sure to like or dislike this video. Hit the subscribe notification bell. I'm trying to produce more content as time goes on. If you like these buy update videos, please let me know. But you know, this is just me trying to be transparent with anyone who is watching. And again, appreciate you guys. See you in the next video.